I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
The third point is, are they spending? And that's what's interesting. In the first 2 weeks of May, the consumer spent 10% more than they did last May. And that's over top of the payments that went out to pay taxes. So the consumer is spending, and people say, well, it's inflation-driven, 8% more transactions.
In the last few quarters, we had our fair share of volatility. We actually don't see claims, but we, fears of what could happen. And of course, all this is coming at a moment in which the economic outlook is not so rosy.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 25th of May. I'm Francine Lacqua here in Davos. It's day 3, and here's what's coming up on today's program. Hawks in Frankfurt. More ECB Governing Council members say half-point hikes should be on the table, but President Lagarde tells me there's no rush.
I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
Yeah.
If we were in a situation where we anticipate de-anchoring, or if we had a surge in demand, that's a different story.
Inflation out of control and investors losing faith in the Fed's ability to fix it. According to Bill Ackman, we get Fed Minutes tonight. And don't miss our conversations with Adena Friedman, President and Chief Executive Officer of Nasdaq, Jose Maria Vinals, the Chairman of Standard Chartered, and Julie Sweet, the Chief Executive of Accenture. All of this coming up from Davos. Now, first thing is first, so let's check on the markets because there is quite a lot going on. When it comes to the markets, yesterday was a big day for technology. Today, a big day also for some of the currency moves that we're seeing out there. Now, stocks are rising. The rate path still the number one thing that investors want to know about. Yields and Treasury yields actually stabilizing after a sharp retreat as markets now assessing the outlook, of course, for the Federal Reserve monetary tightening. Dollar still pushing higher. Now, in the European stocks, you can see utilities, miners, and energy shares actually leading gains. U.S. futures also advancing overnight after stocks fell. Snap's profit warning pummeled companies that rely on digital advertising today. It does seem like we have a bit more, we think, famous last words, a bit more of a smoother transition. So we look for that. And then if you look at the European map, of course, the mood out there, not only talk about inflation, but the energy reliance to Russia. We had 3 great conversations this morning about officials from the Commission that were talking about the oil embargo. The last one in point was Commissioner Gentiloni saying we're just moments away, or at least a week away, from possible oil embargo against Russia. He thinks they'll be able to bring Hungary back into the fold. You can see we're seeing a screen across a lot of these European stocks. Now, one of the key topics, of course, dominating this year's Davos is the outlook for a global recession. This as the COVID recovery, war in Europe, and the energy crisis put pressure on the business and political elite attending the year summit.
For the moment, we are not seeing a recession in the euro area.
But clearly the economy is starting to weaken. But it really, to me, comes down to inflation.
Supply shocks, demand shocks, all together mixed in one. Of course, it is unclear at this moment in time.
We may see prices even going higher, being much more volatile, and becoming a major risk for recession for the global economy.
I worry about a recession.
Eurozone and European Union will not go into recession. There will be a slowdown. But, labour markets are so tight.
Right. There is now an increased risk of recession, but we do not anticipate a global recession.
Now we're joined by Adena Friedman, of course, President and Chief Executive Officer of Nasdaq. Adena, great to have you here. I mean, there's so much to talk about market volatility, and then we'll talk about Nasdaq and some of the things that you're putting in place there. But are you expecting a lot more volatility? Like, how's it like living it, from the inside?
Yeah, I think right now it's really difficult as an investor to figure out what is the future, what does it look like, right? And if you think about the stock market, it's really about investors predicting the future, earnings potential and capabilities of companies. With all of the externalities that you just mentioned in terms of supply chain shocks, still from COVID, as well as the geopolitical risks, as well as inflation, I think it really makes it difficult for investors to make conviction buying decisions. It's a risk-off environment as a result, and therefore I think you are seeing a lot of liquidity. So news ends up having an outsized effect on investor sentiment when they don't have a kind of conviction in the future. So I think that's really what's playing out, and I think that will continue for a while.
So, certainly till the end of this year, Could it be actually a lot longer?
Well, I think honestly it has to do with whether or not we can see that the work that the Fed is doing is going to have positive impact on inflation, whether we're going to see any sort of progress on the geopolitical challenges in Ukraine, and whether or not we're starting to see some easing of those supply chain challenges. If you see any of those as positive signals, I think that will have a calming effect on markets. They are, as I said, investors will have a better ability to predict the future. They'll have a better ability to put their conviction behind certain companies and deploy their capital again. So I'm hopeful. I'm an eternal optimist, honestly, but I'm hopeful that as the year progresses, some of those unknowns will be more known and we'll have a little bit more calm.
So how does Nasdaq in this environment actually sustain revenue growth? I mean, again, it's a high volatility post-pandemic world.
Yeah, well, today Nasdaq actually is a broad technology company that serves the capital market. So about 70% of our revenue is recurring revenue from software and analytics capabilities that we provide to a really broad selection of companies. So whether it's corporate clients, investment clients, exchanges, and broker-dealers. So we have thousands and thousands of clients who use our technology solutions for anti-financial crime, investment analytics, indexes, as well as the markets. And as a result, we're I would say, I look at ourselves as a little bit more of an all-weather company. Volatility in markets creates a lot of trading, but of course it takes some of the, the new IPOs are really taking a break for a while. At the same time, our software services are in many respects more important than ever. Banks' ability to manage crime management and root out their, the sanctions and other things that they have to comply with. That is a great opportunity for our technology business.
Has that been difficult? I mean, going through all the sanctions.
We actually put a new sanction screening module in place for all of our banks, and because we are a cloud-based software solution, we can deploy that to all of our clients simultaneously. So we really try to make sure that we are very nimble in being able to manage and help the banks manage through those challenges. And I think at the same time, our investment analytics business, we provide the ability for asset owners to figure out where they want to allocate their assets. Well, right now it's a very dynamic environment, so they use our tools more than ever, frankly, to make different asset allocation decisions in this environment.
When are you expecting the IPO market to be back?
Yeah, we have about 270 companies that are on file wanting to come to Nasdaq.
From what region? Mainly Americans or also elsewhere?
Primarily the United States, but we do have companies that list from all over the world in Nasdaq. I think that the fact is, though, that as I said, it's a risk-off environment for investors. So they need to feel like if they're going to come out and deploy capital, that the investors are going to be ready to invest in them. And that is not the environment we're in right now. So I think that, again, if we can see some of these unknowns become more known, and particularly in the United States, if we see some easing of inflation, I think that will actually help give investors a little bit more confidence, and therefore, hopefully, we'll see the windows open in the second half of the year, but it's hard to tell.
So really, they're worried about monetary policy adjustment or monetary policy mistake. Well,
I would say that it has more to do with, will the monetary policy changes have the effect on inflation we're looking for, and will supply chain challenges become eased over time?
How can the markets be improved?
How can markets be improved?
In terms of the way they function?
I actually have to say, I think that if I look at just purely from an equities and options world, I think that we do actually feel like the markets have been incredibly resilient through a lot of shocks, like whether it's the COVID crisis or, all of the, frankly, the opportunities that came in the markets in the last couple of years, or the liquidity challenges we're having now in terms of volatility. I think that the markets have behaved well. However, it is always important to realize that it's a forever challenge to make it so that the markets really operate in an optimal way.
Is there anything that you would change in terms of trade or data usage?
Well, I think it has more to do with I think that there's some work that the SEC is doing to look at retail investment, institutional investment in the markets. How can we optimize market structure? How can we strengthen the national best bid and offer, which is the displayed price? How can we make it so market structure and more really works for all investors and brings more liquidity onto exchanges? That's, I think, you're going to see also play out in the second half of the year.
I mean, there's been so much regulation or so many regulation papers. Is it almost too much? Is it difficult to actually wade through what's really needed?
I think that the SEC is very busy, but they're busy across the spectrum of different areas of the market. Within the equities markets and the options markets, I think that they're still evaluating how they might want to evaluate some, propose some new improvements. And we're engaged with them as well as with our market participants to understand, what works, what doesn't. The big thing you have to worry about with regulation is the law of unintended consequences.
Yes.
So as you're putting regulation in place, let's really go through a consultative period. Let's really understand what might happen. And I think that, but I also believe that it's always opportunity for improvement in markets.
Yeah, and you think that's happening? Is there a danger that actually regulation could go too quickly and so, put together haphazardly?
I actually think that the U.S. system is really built for that not to happen, and I say that because of the comment period, right? If the SEC proposes something, the industry comments, and then they do have to take that into consideration and do a lot of work on the back of that to turn a proposal into a rule. And at the same time, we obviously don't always agree with those rules, and in some cases we have challenged whether or not they've done their work. I think that in this particular case, they're still in that consultative period.
I think last year you also announced a deal, I guess, with the Amazon Web Services to move things to the cloud. How's that going?
It's going really well. Actually, what we've done is we've partnered with the AWS to bring an edge cloud compute system into the data centers that we operate in the United States. And we worked with them on a hyper low latency edge compute system, kind of co-developed that with them. Yeah. So we're going to be moving our first options market into a cloud environment in Carteret in the latter half of this year. And it's on plan. It's going really well.
All right, wonderful. Thank you so much for joining us on our Davos set. That was Adena Friedman, the President and Chief Executive Officer of Nasdaq. Now, coming up, despite inflation fears, consumer spending continues to hold up. That's the view from the Bank of America Chief Executive, Brian Moynihan. We'll have more from that interview next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, the boss of Bank of America says U.S. consumers are holding up well against inflation, increasing their spending and paying down their credit card balances. The Chief Executive, Brian Moynihan, spoke with Bloomberg's Tom Keene and Lisa Brownbitz.
The account balances of a consumer pre-pandemic to now are multiples bigger. So a person had 2,000 to 3,000 average collective balance in accounts. Now has, and that would have been about 1,400, 1 to 2,000 would have been about 1,400, is now almost $4,000. A person that had 2 to 5,000 would have about 3,500 on average. It now has $13,000. So just step back and think about it. It grew 5% in the month of April from March. So what you're seeing is consumers have more money in their accounts. The idea that they spent the pandemic money that came in January, March last year, just not true. Now, the second question is they pay down their credit card balances. From 100 billion we were down to 70, it's back up to 80. Lots of borrowing capacity. The third point is, are they spending? And that's what's interesting. In the first 2 weeks of May, the consumer spent 10% more than they did last May. And that's over top of the payments that went out to pay taxes. So the consumer is spending, and people say, well, it's inflation driven. 8% more transactions. Somebody doesn't use.
I don't want to interrupt because we're going to extend this to 45 minutes. This is the real Moynihan, guys. This is the bank nerd giving us the operational stuff here.
But this actually goes to the heart of a lot of the economic questions of the moment, right? Because everyone's talking recession here and stagflation. We were speaking with Bob Prince of Bridgewater. What you're saying does not scream of stagflation or recession.
So that's why I said this. We were talking earlier. This is what makes the Fed's job hard and easy. Hard, easy in that you have consumers in good shape, not over leveraged. The home values went up, but frankly, our LTV in our portfolio is in the 50s. So to give you a sense, so the prices went up and people didn't borrow it out and stuff. So that's the good news. The bad news is what's going to slow them down. So if you look at TSA travel Sunday, it was over top of 19 by 10%. That's a number of people went through the airport.
So what's going to slow them down?
Yeah, so what's going to slow them down? Nothing right now. And so the question is, so the Fed has this very difficult thing of getting them to slow down without slowing them down too much. And then the second thing is the unemployment rate is really low. And so if you look at our Michael Hartnett, it's a great economist. He's got this year mid to high two. He's got next year mid ones, but it's slowing down the next year. If you look at his quarters, it's slowing down. So the idea is the Fed's work slows you down. Now the problem is he still has unemployment 3.5%, 4%. You're saying, wait. You can't slow a consumer down who's working because they have money spent. So that's the difficulty. I believe that they're going to be able to manage this flow, but it's going to be a tricky execution. Then there's things outside their control, the pandemic resurgence, something going different in the war. But America's much different than Europe and other places because of this dynamic of the vibrancy of the U.S. consumer.
Well, that was Bank of America Chief Executive Officer Brian Moynihan. Now let's get straight to the Bloomberg First Word News. In London is Laura Wright. Hi, Laura.
Good morning, Francine. President Biden has called for new restrictions on firearms after a gunman killed at least 19 children and 2 adults at a Texas elementary school. Police reportedly killed the attacker at the scene. He's been identified as an 18-year-old man who was armed with a handgun and possibly a rifle.
As a nation, we have to ask, when in God's name are we going to stand up to the gun lobby?
Pfizer says it will sell its entire portfolio of brand name drugs at cost price in as many as 45 lower-income countries. The initiative will start in 5 African nations with drugs for cancer, rare illnesses, inflammatory conditions and infectious diseases. The plan is one of the most comprehensive drug access programs ever announced by a large pharma company. US banks and individuals have been barred from accepting bond payments from Russia's government. That's after the Treasury Department let a key Russian sanctions waiver expire at midnight New York time, pushing Moscow closer to a potential default. India is restricting sugar exports as a precautionary measure to safeguard food supplies, capping them at 10 million tons in the year to September. After Brazil, India was the world's largest sugar exporter last year. The move adds to a growing list of restrictions on food trade in recent days, including Malaysian palm oil and Indonesian chicken. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now we're live. Coming up, we're back live here at the World Economic Forum in Davos. We'll be joined by the Standard Chartered Chairman, Jose Vinals. That's in just a few moments. That's a conversation, of course, on banking. It's a conversation on recession and inflation. Don't miss that conversation. It's up next, and this is Bloomberg.
We're on the cusp of it. The way we look at stagflation is in terms of how it affects markets. And the way it affects markets is if the inflation rate is higher than discounted and the growth rate is lower than discounted. And we're in a situation right now where there's a very low inflation rate discounted, therefore it's easy to be above that, and we've got a high growth rate discounted, therefore it's easy to be below that. So relative to what's discounted, we could very easily be into this very quickly.
Well, that was Bridgewater's Bob Prince talking to us about stagflation. Now, the UK government, in other news, football news, the UK government has approved the sale of Chelsea Football Club to American investor Todd Boehly. Now, it brings a close to Russian billionaire Roman Abramovich's near 20-year ownership of the football club. Well, joining us now is Bloomberg's David Hellier. David, I know this is very close to my heart because I'm a Chelsea supporter. What does this actually mean for the best club on earth? Of the hate mail I'm going to get.
Yeah, I mean, it's great news for Chelsea. It brings an end to 3 months of, crushing uncertainty for the football club.
So why are American investors actually so interested in the Premier League?
Americans see Premier League football as globally expansive, much more TV revenue than any other league in the football world, and the valuations are, although they look quite chunky, they're on something like 4 to 5 times revenues, whereas an American franchise could be up to 10 times to buy it, and there are very few for sale.
Yeah, so how, I mean, is the price too high? Like, what's your take on this, David? You've been following this right from the very beginning.
I actually think the price is about right. I mean, the price for the shares in Chelsea is 2.5 billion. And that is, I mean, Football Benchmark, which is a reputable, financial analyst, has estimated that Chelsea's worth about 2.2 billion euros. There's always going to be a premium involved when you buy a club like this. The 4.25 billion figure includes 1.75 billion of investment in the team going forward. So it's really the 2.5 we should look at.
Yeah. All right, David, thanks so much. David Hellier there, who covers everything football and sports for us at Bloomberg, and of course has had many scoops on Chelsea Football Club. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Glencore has admitted to more than a decade of bribery and market manipulation. The Swiss commodity trader will pay about $1.5 billion to settle probes in the US, UK and Brazil. Glencore units have agreed to plead guilty to charges including bribery, corruption and price manipulation. New Zealand's central bank has raised rates by 0.5 percentage point for a second straight meeting. The RBNZ lifted the official cash rate from 1.5 to 2% as expected by economists. The bank also raised its forecast for rates to peak at close to 4% in 2023 as it battles inflation. Bank of America is boosting pay for tens of thousands of US employees that earn less than $100,000 a year. Base salaries will climb as much as 7% for workers who have been with the firm since 2021 or earlier. The size of the raises, which start next month, will depend on time spent at the company. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, coming up, we're live back at the World Economic Forum this week. Of course, it's been a busy 3 days. We'll bring you great interviews. We'll bring you everything you want to know about inflation, banking. We'll be joined by the Standard Chartered Chairman, Jose Vinals. Don't miss that conversation. This is Bloomberg. Hawks in Frankfurt, more ECB Governing Council members say half-point hikes should be on the table, but President Christine Lagarde told me yesterday there's no rush.
I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
Yeah.
If we were in a situation where we anticipate de-anchoring, or if we had a surge in demand, that's a different story.
Inflation is out of control and investors are losing faith in the Fed's ability to fix it. That's according to Bill Ackman. We get Fed Minutes tonight. And don't miss our conversation with Jose Vinals, the chairman of Standard Chartered, and Julie Sweet, the chief executive of Accenture. Those are coming up shortly from Davos. So good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Day 3, it's certainly not dull. We've had huge panels and conversations on NATO, on security, on energy, on inflation, on the economy. And then today we continue also looking at Europe and possible more integration. Well, joining us now to put all of these pieces together and to talk about the cost of living and, of course, the crisis that we will face because of the energy transition and the war in Ukraine is Standard Chartered Chairman. He's Jose Vinals. Mr. Vinals, as always, thank you so much for coming on.
Thank you.
I don't know what the biggest concern you have right now, because it seems there are concerns from left, right, and center, and there's just not really a glimmer of hope apart from maybe, countries coming together. What do you worry about the most?
Well, I think that what I worry is about the accumulation of different critical issues, crises, not only for the global economy, but beyond. Of course, we have the macro crisis with the stagflation. We have the energy crisis. We have the food crisis coming in. We have the confidence crisis after the global security order has been shaken. We have the crisis in globalization because there is now further fragmentation in the global order of trade and capital flows. And there are also some cracks in global governance because the West is united, but the world is divided.
I mean, this could be a perfect storm for the world economy.
It is a bit of a perfect storm. And I think we've had big crises in the past, but coming from so different dimensions, this may be quite unique.
So is there a danger that politicians and policymakers get distracted and miss the big picture of taking care of the ones that have the least?
Well, I hope not, but when one focuses on its own domestic priorities, it may be that there is a lack of international action. I think that we have seen positive signs, though, in the way that Europe and the United States and other Western economies have come together in this situation. But I think that there are many other issues where we need more working together rather than more dispersion. And I'm particularly worried about further fractures in globalization. I think that's something that worries me a lot. Yeah.
So do you see supply chains actually moving? So people reestablishing, and how much inflationary is that?
Yeah. Well, supply chains are moving from just in time to just in case, meaning that you do not only have efficiency considerations, but also resilience considerations. That's something which is likely to lead to higher prices. And I think I worry even more about the reshoring and the onshoring, because this is something which runs contrary to the logic of a global economy. And I can understand that from some political points of view, from security points of view, but I think the world would be much better served if one tries to get diversification of global supply chains in order to get the resilience that we all seek.
But what needs to happen for that to actually continue that way? Because we're also seeing, more than a fracturing. It's really almost a world split in two right now.
Yeah, I think there are things that need to happen from the public sector and the private sector. I think the public sector should not put in place policies that actively incentivize the reshoring. It may be okay for a couple of strategic sectors, but I don't think
semiconductors?
Semiconductors would be one case, but I think this is something that should not go across the board, because I think it is back to protectionism. And I think the private sector can do a lot also in order to make sure that supply chains become more secure, more transparent, more resilient. And I think that the digitalization, for example, of trade and global supply chains, and making these global supply chains more sustainable is something that will go in the positive direction. We're going to have the WTO having the ministerial conference, and I think that this is an area where policy should be discussed.
What's the role of banks in all this crisis? Is there anything that actually your bank and other banks can do to alleviate the crisis?
Well, yes. I think that fortunately in this crisis, banks were part of the solution rather than part of a problem. And we have been very close to our clients, trying to help them, clients both in emerging markets and developing economies and advanced economies. And for example, we have been helping clients to carry out the diversification of their supply chains in terms of
loans?
Different international corridors. And to give you an example, from Northern Asia into Southern Asia, in the first quarter of the year, our income coming from that corridor has gone up by 35%. So this is something which is good for our clients. We're helping them navigate these difficult circumstances, and there is a business opportunity.
But this is through loans, or is it what kind of support can you give for the economic transition, or is it actually helping just with finding the funds to be able, that they can electrify their economies and businesses?
Well, we can finance the capital flows which are needed and the reallocations of production facilities which are needed to make global supply chains more resilient, for example. But beyond that, we are taking a very strong stand on resetting globalization and working with many partners, for example, to improve the access of small and medium-sized enterprises to global trade by providing them with the services that they need, with the trade financing that they need. And I think, again, the digitalization of trade is something that improves the access of small and medium-sized enterprises to global trade channels.
Do you think China wants globalization?
I think China has benefited enormously from globalization. I think the world has benefited enormously from globalization. I think that there are two camps, as I see it in the world: those who want to do away with globalization and those who want to perfect globalization to make it more inclusive, more sustainable, more resilient. Standard Chartered, as a global trade bank, is clearly on the second camp, and I hope that reason prevails over short-term political considerations.
Mr. Vinals, thank you so much, as always, for joining us. That was the Standard Chartered Chairman, Jose Vinals. Now, we're also just getting some breaking news out of Prudential. They have a new chief executive. Anil Wadhwani is now group chief executive. We'll see what it means for the share price, but for the moment, it's pretty much expected. I mean, we knew that actually the current chief executive was going to step down, and now we just have the nomination of someone to replace him. Coming up, don't miss our conversation with Julie Sweet, Chief Executive Officer of Accenture, live at the World Economic Forum in Davos. That's next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in Davos. Now, we're now joined by Julie Sweet, the Chief Executive of Accenture, as we go around various industry groups trying to figure out exactly some of the challenges and what they can do going forward. Julie, thank you for joining us. First of all, my fact of the day, I mean, this is incredible. How many employees do you have?
700,000, and thanks for having me.
700,000 employees, and how many did you add in the last 2 years?
200,000.
I mean, that's just incredible because there was so much demand.
There's been so much demand, and the one constant right now, despite the backdrop of the economy, is that IT spending is core to the solutions of the day, whether it's cost pressures because of inflation, or the need to figure out new growth because of the problems in the supply chain, or how to address sustainability.
So, I speak to recruiters about the job market, but you are the job market because you hired 200,000 people in the last 2 years. Have you had to pay them a lot? Do you see, inflationary wage pressures because is it people that change jobs?
Absolutely, wage inflation is real, and paying market is absolutely critical. However, in a tight labor market, it's not all about money. That's table stakes.
Yeah.
We have a philosophy. We say that when people come to Accenture, they need to feel like they're net better off. And that means not just financial security and a great career opportunity, but also things like mental wellness. And in fact, I got my 800 leaders, top 800 leaders together for the first time in 2 years. And the first agenda topic was not our great results or our future. It was about caring for our people and our leaders.
And does this really make a difference? We were having a conversation before about, people resigning, the Great Resignation. Do you think you've been able to scoop up a lot of that talent because you're focused on things that in the past were considered maybe softer?
I think it's partially what you would call softer, but it's really the philosophy of to win, you have to be able to access talent, and that's a lot about diversity. So we're already 47% women. We focus on diversity broadly. You have to have the right talent pools. 20% of our hiring in the entry-level hiring in the U.S. will be apprenticeships. Right. And so it's about access, and we're also a huge talent creator. So we spend $1 billion on training our people. And so that's both great for our current employees, but it's really attractive if you're going to join Accenture.
You're way too optimistic. I need to pour a bit of cold water on that. No, I'm kidding. What's tech spending like?
Well, tech spending today is 5% of the GDP. It'll be nearly 7% in 2030. And despite the recessionary concerns that we're all hearing about, we continue to see in the latest reports that tech spending will increase. And of course, there's a reason for it, right? The supply chain. What's the answer to the supply chain? It goes back to tech spending. We're working with a company today who has a lot of supply chain shocks, and we built an analytics platform so they have early warnings around, their supply chain, and they can adjust, which they didn't have pre-pandemic. So tech is really a solution to many of the issues today.
There might be parts of the business or actually certain sectors that say, look, I'm worried about inflation. I have to pay my staff more. I'm worried about the future. I'm not IPOing. I'm not doing this. And so I'll cut down on tech spending. Is there parts of an industry that do that, or is it still, all guns roaring ahead?
What we're seeing is that is the conversation. We need to cut our costs, but how do we automate more, right? How do we cut out redundancies, particularly in the supply chain? We worked with a South American oil and gas company that wanted to decrease efficiencies, and they're doing it by actually cutting energy consumption using data. So they're saving money, saving energy usage, and decreasing carbonization. And that is a very common theme, particularly with the energy crisis, is how do I use data and technology to automate and kind of meet all of those goals, sustainability and costs?
It's a complex world. Are chief executives more worried about those data centers or cybersecurity?
I think it's both, really. The move to the cloud is actually more secure than on-prem and having their own data centers. And of course, if you're not in the cloud, you can't access data, and it's a pretty simple formula. The leading companies, they need to be in the cloud, they use their data, and then add AI to differentiate. And that is the winning formula today.
What are banks focusing on? So again, there's multiple complex issues that they're dealing with. Where do they decide to put their dollars?
Interestingly, two big themes there. One is the continued technology transformation so that they're tapping new markets. BBVA is a great leader in that around core banking, digital sales, really an amazing example of compressed transformation, basically transforming a lot. But the other theme is sustainability. And I think it's really exciting, particularly here as the World Economic Forum, is the conversations around having a greener portfolio and a better better way to run the banks. And so those two things are coexisting.
I know we talk about it, but the problem is greenwashing. When you look at the data, unless there's something, a real taxonomy, it's going to be difficult for banks to convince that they're doing the right thing across the board.
Well, I think, though, you're going to see that, based on what we're seeing with clients, that the whole myth around either greenwashing or that there's a trade-off between business success and, societal benefits is actually being blown up, because if you use technology and embed sustainability at the same time, which is what we're seeing the banks doing, you can actually achieve both. And you're also seeing banks, for example, Barclays was talking recently about how they're giving home mortgages for more energy efficiency.
Right.
And so you're seeing banks help that transition as well.
Talk to me about fintechs. Are big banks going to be left behind because you have these exciting new propositions? They're more nimble, they're only mobile, and what can big banks do about it?
Well, you're seeing a lot of big banks start their own digital banks.
Yeah.
And so Mizuho Bank is a great example of that in Japan. And so what we see is the financial services industry is doing what other industries is, how do you yourself become an innovator and how do you partner?
Yeah, the most difficult question in the world. Thank you, Julie, for joining us. Julie Sweet, they're the chief executive of Accenture with 700,000 employees. I'm not going to forget that. This is like my fact of the week. Coming up, we'll be speaking to Stéphane Bancel. He's the chief executive officer of Moderna. That conversation live here at the World Economic Forum in Davos. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, to the war in Ukraine, and NATO's Secretary General has called on Russia to lift its blockade of the port of Odessa and to end its senseless war. Well, Jens Stoltenberg was speaking alongside European leaders at a WEF panel on EU security.
It's actually the European public that looks at us and that says, please, for those big challenges, we know that the nation state on its own cannot do it. Please do it as European Union. Healthcare was not exactly European competence. Energy isn't really as well, and defense isn't really either. The public demands from us more integration. And yes, so there's more demands of how much we should do, but if we do it as in an integrated way, we can do it in a more efficient way, and we can do more.
Minister, and then I have many questions for you, Secretary General, also from the audience, so I'll get to that in a second.
Just briefly, I think, yes, we are increasing our budgets for defense, and that is also, you have to prioritize. You cannot do everything at the same time. But I think it's not only about defense. That's not only about having military at our borders. It's also about our freedom. It's about rule of law. It's about democracy. It's what we all stand for. So that's why I think we all feel it's important to do it, but to do it in a smart way, as Prime Minister of Belgium is just stated. And I think also you have to look at the future. So at the same time, with climate change, with the importance of having a well-educated population in our countries. These are the choices that you have to make, and sometimes it means raising taxes, being smart, because we also have our budgetary rules, and they apply to all of us in the European Union, at least.
Thank you. I have many questions for the Secretary General, so we'll start off a bit rapid fire. This one is it time now for a naval coalition of NATO states to secure a free and open Black Sea by escorting vessels from Odessa to supply grain to the global south?
It's first and foremost time for President Putin to lift the blockade of Odessa and other Ukrainian ports to allow grain to be exported out of Ukraine, because this is really his responsibility. The war is causing the food shortage and the increasing prices. It's not NATO or EU sanctions. It's actually the direct consequence of the war and the Russian blockade. Then I welcome efforts by EU, by NATO member states and others to try to find a way to get more grain out of Ukraine by rail, on land, and also the efforts that are addressing is it possible to get it out on ships. That is a difficult task. It's not an easy way forward. The best and easiest way is to end the war, to drop the blockade and let the food go out. Let me add one more thing. And this is a war in Ukraine that affects the whole of Europe, but that it has global consequences. the increasing energy prices, and food prices affects everyone and the poorest people of the world. It just makes the whole war, the Russian invasion, even more senseless.
That was the NATO Secretary General Jens Stoltenberg speaking at the World Economic Forum with the Belgian Prime Minister and the Defense Minister of the Netherlands. Now let's get to another conversation from Davos. The IMF First Deputy Managing Director Gita Gopinath says global food inflation is a major concern and will likely continue to go up. Bloomberg's Tom Keene and Lisa Abramovitz spoke to her here in Davos.
Tom, this is a major concern for us. I mean, it's not just India, but if you look at food exports, since the start of the war, around 20 countries have put restrictions on food exports. It's be it wheat or be it palm oil and many other such products. And fertilizers also are in serious shortage. So we worry a lot about what's going to happen with food prices. I think it's one of those prices where there's probably more that's going to go up in the future than what we've already seen. And it is a major concern.
The history here is a domestic government will come to the rescue, flatten prices like the cost of bread in Egypt has been flat for decades, and subsidize whatever the commodity is until it breaks. How close in your study, country to country, are we to a breaking point of that domestic subsidy to feed people?
Look, after 2 years of the pandemic, governments around the world, especially in countries like Egypt, do not have the fiscal space to provide widespread support. And this is something that we are tracking very closely, exactly this question of how many countries are now facing these rapid increase in import prices and therefore are likely to have balance of payments problems. This is one of the trackers that we have. And this is a major concern.
How much is this a failing, frankly, of the developed world from supporting Ukraine more? In other words, from actually providing more financial aid in order to get some of those supplies to the rest of the world?
You know, this is a very challenging issue about how to get Ukraine's supply out of Ukraine. The problem is the embargo on the Black Sea. I mean, you just cannot get the ships to take the wheat out. Thinking of creative solutions in terms of putting them on train and sending them out through that way, but that's going to take a lot more time. In addition to the war, we're also seeing the effects of climate change around the world, and one of the reasons why India has put its export restrictions on wheat is because of poor yields and bad weather. So that's another big negative. But we really do need to try very hard at this point to try and get supply up as much as possible around the world.
The IMF First Deputy Managing Director Gita Gopinath talking about the vital issue on food inflation. Well, plenty more from Davos throughout the day. In the meantime, this is what the markets are doing. A lot of the focus certainly on inflation, a lot of the focus on what we have from the Fed a little bit later on. Markets on a path to a bit more normality after an ugly day yesterday. We're seeing across the board gains, not only in Europe, but also in the U.S. Treasury yields stabilizing after a pretty sharp retreat, as again, the markets are trying to reassess or assess the outlook for Federal Reserve monetary tightening. The dollar pushing higher. We'll have plenty more, of course, from Davos throughout the day. But now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, or Anna Edwards in London. And this is Bloomberg.
We think of this as a monetary inflation. We think we're in a monetary inflation.
Are they worried about inflation? Yeah, because every time they open a paper, the paper says worry about inflation.
I don't think we're facing into recession. Not as rapid growth as we might have hoped for, certainly. But, you know, who knows, and we can't take that for granted.
There are headwinds. Absolutely. There are many downside risks.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, May 25th. Our top stories today. Massacre at a Texas elementary school. At least 19 children are shot and killed. President Biden demands the U.S. stands up to gun makers. Russia is one step closer to default as the U.S. Treasury allows a key sanctions waiver to expire. U.S. banks and individuals are now barred from accepting bond payments from Russia's government. And economists say China's almost certain to miss its growth target by a large margin for the first time ever as Beijing's strict COVID-0 policy hammers the economy. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And the global growth story, very much the conversation when it comes to those on the slopes of Davos, Kailey. Modest gains being made here on European equity markets. I imagine many in the US waking up, though, with their thoughts elsewhere after what happened in Texas yesterday.
Yeah, absolutely, and especially those parents waking up, getting ready to send their children to school. Of course, all of our thoughts are with those families in Texas. Our thoughts also, as you say, are with global growth. That has been a story very prevalent in China for weeks now as it continues to grapple with its COVID-0 policy and monetary and fiscal responses that there's questions around how much they can actually offset that negative growth impact. Nonetheless, it was a mostly up day in Asia overnight. The MSCI Asia Pacific Index up essentially flat, up about 0.1%, but Chinese equities were indeed higher, up about 0.6%. Now, the other story out of the Asia-Pacific region that we were monitoring overnight was in New Zealand. The RBNZ hiking rates 50 basis points plus, signaling that the path forward is going to be more hawkish than previously thought. Rates getting up to 3.95% by the end of 2023. So that more hawkish outlook really showing up in the short end of the New Zealand bond market. That 2-year yield up 2 basis points to 3.25. And the New Zealand dollar, the Kiwi, one of the only G10 currencies stronger against the US dollar today, Matt. It's trading right around 64 cents.
All right, very interesting stuff there. And in terms of markets, we've had a little bit of a roller coaster action already this morning. It's no longer buy the dip. Now it's sell the rip. We had futures up and now they're down. Just 0.1%, but the move is about 1% in the last hour or so. U.S. 10-year yields coming down as investors now buy that debt. We have 274, which is in line with what we saw yesterday. So not really a lot of movement in the last 24 hours for yields, but we have seen them come down dramatically from 3% last week. NYMEX crude up 1% at 110.91. It's been hovering around the 110 level as well, so not a heck of a lot of movement there, and almost nothing on Bitcoin, 29,762. So it looks like this market really has to assess how it feels about growth. It doesn't look like traders are making really big decisions right now because we're just doing a whole lot of nothing, I guess, waiting for the open. Anna, what do you see in Europe?
Yeah, a whole lot of nothing here, essentially, as well, Matt. Really assessing where we are on the inflation story, on the inflation fight, and then the growth implications of that fight. That's the big question hanging over markets these days, isn't it? We see that in bond markets, those moves up we see in those yields, and then that demand for sovereign debt that steps in. So this is what we see on European equity markets right now. It's a pretty mixed picture, a fairly flat picture, with just the right side of the flat line. If you are long of these markets, of course, up by 0.3% on the UK market. Some of that comes down to basic resource stocks and also to equity and also to energy stocks, So I can show you that we've got the energy sector moving higher, the basic resource sector moving higher. Here's basic resources up by 1.9%. The euro is interesting. We tracked it higher yesterday. We showed it to you yesterday. It was moving higher in session, now down at 106, down by 0.6% for the euro. Yesterday, the moves higher on the back of Christine Lagarde setting out her expectations for rate hikes. That was then followed by a lot of hawkish voices saying, can't we move faster? Today was the day for the doves to speak out. We've heard a few cautious voices saying, hang on, let's be a little gradual here and see what happens with growth. Drax Group, this is another story hanging over from yesterday. Yesterday, we talked about Drax and SSE and Centrica, these power-generating businesses in the UK that dropped on the threat of a windfall tax to pay for the cost of living crisis here in the UK. Well, we see reports in the other direction from other media, I should say, that are suggesting that maybe those taxes won't be applied to these businesses, and so we see Drax and others regaining some of that lost ground from yesterday. And Matt and Kailey, this one I put in just to cheer everybody up this morning, Pets at Home. And because we were talking about Petco, Matt, yesterday as well, this stock up by 8.7%. It seems that despite everything, despite inflation, we are still very happy to go out and spend a lot of money on our pets.
as usual.
Yeah, can definitely say that is true for me and my 8-month-old silver lab, Anna. Now let's take a look at what is ahead today. Twitter will be holding its annual general meeting at 1 p.m. New York time, where investors are expected to ask questions about that pending transaction with Elon Musk. Then G7 energy and environment ministers are set to start a 3-day meeting in Berlin. And finally, 2 p.m. Eastern time, the Fed minutes will be released here in New York. We'll look to see what clues we get out of the FOMC, Matt.
All right, we will definitely be watching that very closely. But one of the things that is sort of occupying our focus this morning is a terrible story, the deadliest school shooting in almost a decade. A teenage gunman opened fire at an elementary school in Texas, killing at least 19 children, as well as 2 adults. A number of others were wounded. The gunman was then shot and killed by law enforcement. President Biden spoke after the attack.
As a nation, we have to ask, when in God's name are we going to stand up to the gun lobby?
Anne-Marie Horder, and Bloomberg Washington correspondent, joins us now from Washington, D.C. What do we expect the ramifications of this to be politically, Anne-Marie?
Good morning, Matt. Yeah, you don't think this story can get worse, but for me, I went to bed and actually woke up, and the death count of 2nd, 3rd, and 4th graders actually rose by the time I got out of bed this morning. Politically, we've been here before. This is the deadliest mass shooting of an elementary school since Sandy Hook in 2012, and there has been pushes in Congress, a very angry America pushing for gun legislation, but it has been blocked by Republicans. And the issue they have right now is, of course, that the Senate is divided 50-50. The House last March passed legislation that would expand background checks, 2 bills that would expand background checks before being able to buy certain guns at gun shows and online, and yet that has not been able to move in the Senate. Politically, it depends what this could mean for the November midterm elections. That really comes to mind. If this is something that can galvanize people to put lawmakers in place that would want to move on this kind of legislation.
On the subject of those midterms, Anne-Marie, obviously we had primaries in a number of states yesterday, and in Georgia, Trump-backed candidates ended up losing. What signal does that send?
Yeah, Governor Kemp not just winning, but really winning over Trump-backs Purdue. This was really a mixed bag so far when you look across the United States on the primaries. But this really just shows that Trump's hand-picked choice was not able to turn it out. And this one is very interesting because Kemp has been the governor that has said that the 2020 election results were fair. And Trump has constantly campaigned against this individual, and he won big last night, so he's going to be running off against Stacey Abrams. So, it remains to be seen because we need to get a lot of other results in place, but it does seem that at least in Georgia, Trump is really losing his hold.
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horder joining us there from Washington. Back to the market stories now, and Russia is edging closer to a potential default. That's after the U.S. Treasury Department let a key sanctions waiver that had been benefiting American investors. They let it expire. Let's get more with Bloomberg's Danny Berger, who's with us. So Russia gets closer and closer to default, it seems, Danny.
Exactly. So this license that had been enforced since the first round of sanctions allowed U.S. banks to bring in dollar-denominated bond payments from Russia. So it was let expire on midnight as of midnight New York time this morning. And that will make, of course, it really difficult for Russia to service debt for those holding it in the U.S. Again, as you say, pushing them closer to default. A few to-be sures here. To be sure, we did have them start to step up payments in anticipation that come today they would no longer be able to do this. And there's a lot of European debt holders, so Russia might find a way to pay them and perhaps avoid default if enough of that money is paid out, save for that for the U.S. Now, they do have about $1 billion in coupons due through the end of 2022. And if this is a way to really hammer down on the Russian economy, one thing that shows that perhaps it's not having that impact is the ruble. The ruble barely moved on this news. Now, it is a lot of capital controls in this market, so there are a lot of questions to how accurate it is. But one thing that has been happening is this huge trade surplus in Russia. Money has just been pouring in because of the sale of commodities. You get the ruble ruble hitting the strongest in quite a few years, and sort of adding insult to injury, almost on the day that this license expires, pushing Russia towards a default, they announced that they're having an emergency central bank meeting, the purpose of which is to talk about and combat this very, very strong ruble. They haven't said their options, but many think it will indeed be a rate cut, Anna.
Yeah, we often talk about the commodities exports of oil and gas, but also on the food crisis.
Yeah.
We had a story just yesterday saying that Russia is winning from the global food crisis that it helped to create, something no doubt we will return to reporting on. Danny, thanks very much. Danny Berger with the latest on Russia there. Let's pivot to China, and China is all but certain to miss its economic growth target by a large margin for the first time ever this year, as the country's COVID-0 policy hammers the economy. Bloomberg's Tom McKenzie has the details. And Tom, we talked just yesterday about a couple of banks taking down their forecasts for growth in China. Now we have this kind of consensus emerging that these targets will be missed.
Yeah, so this is a Bloomberg survey. The median forecast is for 4.5% growth out of China for this year. The target the government set themselves is about 5.5%. So obviously a substantial miss. Bloomberg Economics actually see growth falling as low as 2%, the first time that the US will outpace, according to Bloomberg Economics, China since about the 1970s. So again, it just underscores the concerns about the impacts of COVID-0 and the utility or not of announcing new policy measures when so much of the country remains in restrictive territory, lockdowns in Shanghai and restrictions in places like Beijing. So what do? Well, they could fudge the numbers. Goldman Sachs saying you could smooth over the statistics and maybe increase GDP by about 1%. Of course, there's been long-running concerns about the veracity of Chinese data. But in this case, Goldman Sachs says the hit from COVID is so big that they probably won't be able to do that. Or they just downplay this target, and certainly they haven't mentioned it since March. But just to underscore the concerns in, of course, just to reiterate, an important, very important political year for Xi Jinping as he seeks to get a third term, the front pages of some of the biggest state-run newspapers hailing Xi Jinping's economic advantages, economic successes in the media today, in Chinese media, and pointing as well to a magnificent and bright future for the Chinese economy. Well, when I speak to people on the ground in China, that bright future, that magnificent future seems a very, very long way away at this point.
The interesting thing to me, Tom, is that they let these numbers see the light of day. I mean, we always assumed previously that you had to take Chinese economic figures with a massive grain of salt, or many. And at this point, especially for Xi Jinping, to allow this kind of information to get out doesn't fit that narrative.
It doesn't. The most recent data, official data, does tally with some of the high-frequency data that economists look at, suggesting that they haven't been fudging those numbers at least. And in the last few years, you have had economists within China saying, look, let's downplay the target. In fact, some economists in China have said, let's just drop the target altogether. Others push back, saying it's important because it motivates officials at the local level to achieve certain targets. But it is less important than it once was, still significant, and many officials and cadres will be judged on their economic performance. Xi Jinping himself may be being judged as well as he leads up to that third term, Matt.
Tom McKenzie, thanks very much. Covering all we need to know out of China. Now, Twitter holds its annual shareholder meeting today, where investors are expected to ask questions about Elon Musk's planned takeover of the country, what we thought was a planned takeover of the company. Let's get more at Bloomberg's Laura Wright. Laura?
Twitter marginally higher in pre-market trading. Yes, it's the AGM today. While there won't be a vote on Musk's proposed acquisition, the key question really is whether Elon Musk, the world's wealthiest person, will show up in person or virtually. Will he make any inflammatory comments? Remember, at present, Musk is still the social media platform's largest shareholder with a 9% stake. Now, the spread between Musk's offer price of $54.20 a share and where Twitter closed yesterday stands at $18. That's the widest since we learned of Musk's initial stake all the way back on April the 4th. Now, in various threads on Twitter, Elon Musk has indicated that if 25% of accounts on the platform are false, his offer should be 25% lower. And you could argue that the fallout from Snapchat yesterday bolsters Elon Musk's ambitions to lower the original offer price. So where do we stand on the deal at the moment? Well, according to advisors on both sides who are close to the deal, they are working diligently, so this crosses the line under the original format. But there are a couple of other scenarios at play here. A lower price is agreed between both parties, or either Musk or Twitter walk away with a $1 billion exit fee, maybe another investor shows their interest, but that's unlikely given the platform is now synonymous with Elon Musk, or the offer becomes legally void. That's quite a tricky scenario to materialize. Elon Musk, for example, would have to show that something has materially changed. Now, Tesla has taken a huge hit throughout all of this, down some 40% year to date. Another tough close yesterday for the world's most valuable electric vehicle maker. In fact, pulling Elon Musk's wealth below $200 billion for the second time. It signals a lack of conviction. Pre-existing shareholders believe his pursuit of Twitter, that is. But as if to try and assuage that concern, Elon Musk tweeted last week he is only spending 5% of his time on this deal. I don't think the world is ready for when Elon Musk ramps up his energy levels. Will any of us be able to cope?
All right, Bloomberg's Laura Wright, thank you so much. Now let's get back to some of the other stocks moving, social media stocks moving in pre-market trading in the U.S., one of them being Snap, which of course was the big story of yesterday, had a more than 40% plunge, its worst day on record. The bleeding does not stop this morning. That stock down another 0.5% or so after its outlook cut of yesterday. A more positive story, though, for Nordstrom. It is, of course, a department store retailer. It actually was able to raise its outlook, really highlights the difference between the higher end and lower end consumer and their propensity to spend in the face of inflation. Nordstrom is up about 10% in early hours. And another big up move is Wendy's. Trian Fund Management, Nelson Peltz's fund, actually says it may be looking at buying this company. That stock up about 9% as a result, Anna.
Coming up on the program, more from Davos. We will speak to the Siemens Energy chairman, Joe Kaeser. He'll be live on the slopes with us. And Simon Freakley from AlixPartners, the CEO of that business, will be talking to the team in Davos. Plus, he was the go-to banker for the wealthiest Russians, bringing in billions for Credit Suisse. But now the money has come to a sudden standstill. Read more of today's Big Take story by typing NI Big Take into your terminal. This is Bloomberg.
Actually, right now, my main concern is not the components. My main concern is that we don't follow up on the targets. I'm absolutely one that says a transition in energy takes probably 3 decades. So please don't slow down. Be ready to follow up.
And that was the CEO of Vestas, the world's largest manufacturer of wind turbines, speaking to our own Francine Lacqua out of Davos. Francine joins us now with Joe Kaeser, chairman of Siemens Energy.
Yeah, thank you so much, Matt. And I am delighted, as always, to catch up with Joe, especially, Joe, since you're really at the heart of some of this transition. A lot of the people in Europe need to transition because of the dependency to Russian oil and gas. Germany really at the forefront of this. What industries will not be able to do it without a lot of pain?
Well, definitely, it's all those industries which need a lot of energy. Think about the chemical industry, all the basic materials like glass and steel, cement. Those will be the most affected ones.
So what's the right way to help them?
Well, to set the priorities, right? So I think the earlier those industries are in the value chain, for example, the chemical industry supplying the car industry and many, many other industries in the value chain, they need to have the biggest priorities. The ones, which we can do without for a while, need to have the lowest one. It's painful, but that's, what crisis management is all about, setting priorities.
Do subsidies help?
No, we need a good plan. Energy and energy agenda is about a long-term plan, not about, every 4 years with a new government, we do the next big thing. That's not working. Remember 2 years ago here in Davos, it was, who is the greenest of all time? Today, everybody talks about crisis, so neither one is right.
Joe, the problem is that you need about a 20-year plan to make the transition work. Do we have that time? Can we afford that time?
I think we can do it in 5 to 10 years. If we, get out the regulations, the bureaucracy, and all that stuff. If it takes 8 years to build a grid for 500 kilometers, we have a problem. We could build it technically in a year or a year and a quarter. But if you need 8 years, you have a problem. And so it is about the political will to set an agenda, even if it hurts some of the voting community going forward.
So you want what, deregulation, American style?
I wouldn't say American style. I think we do a thoughtful, sit together, make an agenda and say what's important for our country in the long term. And that's obviously is about the energy agenda. then we listen to people and say, look, tell us what you think, but then we need to make a decision. You know, energy agenda, crisis management, building the next generation is not a basic democratic process. This is about leadership.
There's a lot of American investors watching us now. How can America, United States of America, actually help Europe in this transition?
Well, first of all, if they help us contain the Russian-Ukrainian war, the United States is the only one power which can do that. And that's really important. And then the European Union needs to get together and find a foreign economic policy on how it acts towards China and towards the United States. And then we need to get a policy on how to build or rebuild Europe.
Yeah. When you talk about renewables, there's a lot of people here in Europe that say, you know, this will save us the future. Not everything's working. I know you're having trouble with some of your wind turbines. What's the problem with wind?
Well, the issue currently on renewable and predominantly in the wind energy is that not a single of the big companies, neither Siemens Gamesa nor our bigger competitors, are making any money. So that means the profit pool of that industry is negative. So if a profit pool is negative, and this is so attractive, how come?
But why? Why is it so difficult? I know it's supply components. I know there's delays.
Yeah, the industry got caught flat-footed. First of all, on the cost inflation of the raw materials, but that's only temporary, 1-2 years. Second topic is the industry has gotten ahead of itself in terms of forward pricing. You know, it was 7 cents, it was 5 cents, and people say, well, if you want to build this, you need to have 3 cents. And people were jumping into that, trying to understand, well, time will tell, you're really going to find some savings along the way, and we didn't. Yeah. The fact of the matter was that actually through the inflation of the raw material prices, you know, it got the other way.
So are we too ambitious actually with trying to do this too fast?
We didn't think it through. You know, the energy transformation is about going from a sort of functionally okay conventional power supply to an all renewable one. Yeah. So you need to make a plan how you make that work. And the priority number one is the grid. It is the grid. It's not building more wind and more solar. It is about connecting the generation.
I mean, there are huge question marks also about hydrogen. When will you make hydrogen profitable?
Well, it depends on which one. You know, you have the so-called gray hydrogen, it's very profitable already. Linde, Praxair, others are very profitable and they do hydrogen. Then there's the blue hydrogen, which basically does the CO2 extraction and put it back into the earth. Competitive, but complicated, because whenever that, you know, people want to put that into the ground through a well, but what happens is that comes back up. So environmentally complicated. The green hydrogen today, if you want to make that out of electricity, I think that's a bad idea. Right. You need to first serve the society with electricity. Once you're done with that, we should convert electricity into green hydrogen.
Joe, thank you so much. Very thoughtful in terms of the sequencing of all of this. Kailey, back to you in New York.
All right, Bloomberg's Francine Lacqua, thank you so much. She, of course, joined by Joe Kaeser, chairman of Siemens Energy. And Francine will be back with us shortly with more from Davos. But, Matt, I find this conversation around renewables so interesting because it's called a transition for a reason. You can't just snap your fingers and be in a green energy-fueled economy. And especially when we talk about sources like solar and wind, the sun doesn't always shine, the wind doesn't always blow. So you need to be able to solve that intermittency issue, and that's going to take some time.
Yeah, and I think it's doubly interesting in Europe, especially in Germany, where they've decided to phase out nuclear energy completely, which provided so much clean energy, and now they're having to rely on pretty much the dirtiest source of their lignite coal.
Yeah, and meanwhile, the piles of LNG keep piling up, stocking up here in the UK, where we have lots of LNG terminals. Can't use it all at the moment, but also don't have quite the capacity to send it all to Europe, where they could use it. So interesting dynamics to think about in energy markets. More from Davos when we return. Simon Freakley, AlixPartners CEO, will be with Francine. This is Bloomberg. This This is Bloomberg Surveillance Early Edition. Here's what you need to know. It's the deadliest school shooting in almost a decade. A teenage gunman opened fire at an elementary school in Uvalde, Texas, killing at least 19 children and 2 adults. President Biden demanded action to curb the violence, but gun control legislation has stalled on Capitol Hill. Russia is one step closer to default as the U.S. Treasury allows a key sanctions waiver to expire. U.S. banks and individuals are now barred from accepting bond payments from Russia's government. And China is almost certain to miss its growth target by a large margin for the first time ever. Beijing's strict COVID-0 policy has hammered the economy. Economists' median forecast for Chinese growth this year has dropped to 4.5%, a full percentage point below the official Chinese target. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, global growth continues to be the topic of conversation, really, when it comes to Davos and elsewhere. Markets not moving a great deal, though, this morning. I guess we've got Fed minutes later on.
Yeah, absolutely. So maybe traders are waiting to see the Fed minutes. And actually, it does look like from money market funds that the pricing in of rate cuts has come down a bit. We had been expecting more like rate rises, more like 3 50 basis point rate rises. Now it's coming down closer to 2 over the next 3 meetings. The S&P futures not doing a lot right now, very little change, down about 0.2% U.S. 10-year yield also very little changed at 273. We saw it at 274 a few minutes ago. So investors are buying those bonds and pushing the yield down. NYMEX crude continues to rise, so now a gain of 1.5% at 111.45. We saw it just 30 minutes ago at 110. So we're seeing some movement there as well, less so in Bitcoin. We've seen it hovering around this $30,000 mark, although it is on the downside of that mark. It has been for the past couple weeks right now at 29,670. Kailey, what do you see in terms of the pre-market movers?
Well, of course, the action in pre-market isn't as dramatic today as it was yesterday when we saw Snap and other social media stocks absolutely decimated after Snap cut its outlook for profit and revenue, warned about a deteriorating macroeconomic environment, and as a result, advertising headwinds. This morning, though, much more muted action. Snap is actually gaining a little bit of that 40-something% loss of yesterday back. It's up about 0.6% in early hours, so really nothing to sneeze at. You are seeing some bigger moves, though, for the likes of Nordstrom, of course, a department store retailer. It reported after the bell yesterday, actually raised its outlook. Stands really in stark contrast to what we heard from Target, Walmart, retailers that cater to the lower-end consumer. The higher-end consumer apparently still spending in the face of inflation, and that has a positive read-through to Nordstrom peers like Macy's, which is up about 2% before the bell. Finally, also making note of Wendy's. This is on news of a possible acquisition by Triumph Fund Management. That stock is up 11.5% in early hours, Anna.
Kailey, here in Europe, a little bit of treading water going on, waiting for a little more clarity, perhaps on the Fed. Those Fed minutes, as we've said, due out later on today. So stocks Europe 600 up by 0.3%. We still have energy stocks, basic resource stocks, rebounding from some of the losses that we saw yesterday. Of course, technology was really the heart of it yesterday, and media. The euro is retreating a little. Yesterday, we saw that move up. That was on the back of comments from Christine Lagarde and hawks at the ECB. Today, it was the turn of the doves. We had some more dovish lines coming out from Fabio Panetta, for example, talking about taking things gradually and being alert to downside risks. Drax Group, this is the power generation business here in the UK. Yesterday, these stocks in this sector, Drax Group and others, were really hit by reporting in other media that suggested there could be a windfall tax on those businesses. Today, we've seen some of that reporting dial back a little bit, and as a result, these stocks rebound. Pets at home, Kailey was just mentioning some of the spending that we were seeing on luxury names. Well, it seems we still find it within ourselves, despite inflation, Kailey, to spend on our pets, and Pets at Home Group reporting strong numbers today, and the stock is up by just shy of 9%.
As I always tell my husband, Anna, the dog needs more toys. He chews through them pretty quickly, though. So really, we need to replace the toys pretty often. Of course, while we all are spending maybe on our pets, there is a broader question out there about how much consumers are going to be willing to spend in the face of higher prices. And as policymakers act to tame those higher prices, what is that going to mean for the growth outlook? Here's what some of our top Davos interviewees have said about the risk of a recession.
For the moment, we are not seeing a recession in the euro area.
But clearly the economy is starting to weaken. But it really, to me, comes down to inflation.
Supply shocks, demand shocks, all together mixed in one. Of course, it is unclear at this moment in time.
We may see prices even going higher, being much more volatile, and becoming a major risk for recession for the global economy.
I worry about a recession.
Eurozone and European Union will not go into recession. There will be a slowdown. But, labour markets are so tight.
Right. There is now an increased risk of recession, but we do not anticipate a global recession.
Joining us now is Janet Mui, head of market analysis at Brewin Dolphin. All right, Janet, where do you come down on the risk of recession and the market's pricing of it?
Hi, good morning, Kelly. Well, our view is that, of course, growth is slowing is a pretty strong consensus now. But we do think that a recession this year is still unlikely. But I think the question should be how bad, if a recession is coming, how bad it is going to be, the duration of that, rather than if that will happen. Because we all know that every economic cycle ends with a recession. So in our view, we think that the recession wouldn't be too bad because consumer resilience is still there. I mean, households have saved up, and also a lot of the mortgages are fixed rates in the UK and the US. So that should shield the households from these pains of high interest rates. And of course, the labor market is very strong. And we do think that the high number of job openings should also help to absorb some of the laborers that may be laid off during a slowdown phase of the business cycle. So overall speaking, I mean, there is, of course, slowdown, but we're not too pessimistic.
So the unemployment rate, of course, clearly a bright spot still for the US economy. What should we look for in markets, Janet, as we see the Fed actually enact these rate hikes that have been priced in? What are you expecting to see there? Because if we get 50 and then we get another 50, if that is all priced in, should that cause downward movement, or will it allow stocks to recover and move on?
Yeah, we do think that the markets look a bit oversold at the moment. Clearly, the concern has shifted more from inflation to now the concern on the recession. I think markets are more and more pricing in that high possibility of a recession, right? We do think that a lot of interest rate increases are already reflected in the market pricing already, right? The interest rate future suggesting US rates could potentially reach almost 3% by the end of this year. And I think that's realistically the max that they can get to this year. So I do think that if the economy starts to slow a little bit, and inflation, of course, peaking and more signs of that slowing down, then I think the narrative of the Fed can turn slightly less hawkish by the end of this year. And I do think that the sell-off has been a bit too harsh, so that could be some more stabilization from here onwards.
Yeah, what do you make of the inflation expectations picture at the moment, Janet? It does seem to have stabilized and, in fact, coming back a little, perhaps reflecting the fact that a lot of people are talking about peak inflation in the US and that point having been passed. We'll wait to see if that happens. What does that mean for investment, though? What does it mean for treasuries, for example?
Yeah, absolutely. I was on the program, I think, last month talking to you about that, and you asked me about inflation expectation as well. Well, we did believe that inflation expectation has peaked. Well, you can see that pretty clearly in the US break-even rates. And we actually have reduced our inflation-linked bonds exposure last month because we feel that the peak is coming, because oil prices are peaking and growth is slowing, and of course, markets are pricing in more aggressive rate hikes that naturally will lead to slower prices going forward. So there's a lack of catalyst of how more inflation can go from here. And I also think that bond yields, it has come back off quite sharply recently, and that consolidation can still happen because we're talking about potential high risk of a recession, markets are concerned, and peak in inflation, et cetera, et cetera. So I do think that, in the near term, wouldn't be surprised if bond yields can go slightly lower from here.
We've seen, Janet, equity, well, the S&P 500 at one point intraday was off 20%. Now it's down 17.3% year to date. And we've seen PEs come down below 20, back to more normal historical levels. But we haven't really seen capitulation, right? I mean, the VIX, I think the highest it got was like 32. Do we need to see it at like 40 or 50 before we can go back in?
Yeah, I do think, at this point, we do think the markets are priced in a lot of risk already. I mean, intraday, that S&P 500 did pay into the bear market suggests to us that it is increasing, pricing in the risk of a recession. I think in the near term it's a bit oversold, given that the economic resilience is still there at the moment. And also we think that with bond yields coming off a little bit, that should help with a bit of relief as well. But of course, markets are very concerned. So that's why we wouldn't rule out near-term volatility, and we can never put a time on when the market may bottom. But we do think that markets are pretty oversold.
So you
at the moment.
you can't time the absolute bottom, is what you're saying. But if you had cash to invest right now, would you put it in equities?
Yeah, I think a gradual deployment could make sense, given that valuations, as you mentioned, have returned actually to pretty much more normal levels, right? The U.S. Forward PE earnings have returned to more like a 10-year average. So that is starting to look attractive. So if you're long-term investors, you know that in the future you're going to see market recover and you'll see more substantial gains if you buy at current levels, right? So I think maybe a gradual deployment in capital could make sense in this environment, given we never know where's the bottom.
Janet, thanks very much. Janet Mui, thanks for joining us from Brewin Dolphin. Coming up on this programme, more coverage from our team on the ground in Davos. We will speak with the Eurasia Group President Ian Bremmer, Cisco CEO Chuck Robbins, and Guggenheim CIO Scott Minerd. All of those conversations coming to you throughout the day. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Let's get back to Davos. Francine is there, Francine Lacqua, and she is joined by the CEO of AlixPartners. Fran.
Yeah, I'm delighted to be joined, of course, by Simon Freakley of AlixPartners. So much to talk about, Simon. The recession, is it coming, and what does it mean for businesses? How many will go under?
Well, whether we're technically heading for recession, I don't know. We're certainly heading for choppy waters. The spike in energy prices, the spike in food prices, all of which gets passed on to the customer. I think we're heading for some challenging times.
Are there industries that you worry about more than others? You're a lead indicator because you do a lot of the debt restructurings.
Well, we've come through COVID-19 with the biggest disruption of our lifetimes, and now, of course, we're into this humanitarian tragedy happening in Ukraine, another profound disruption. The COVID-19 was a dress rehearsal for challenging times to come. Truthfully, I think it's going to affect every industry.
But in terms of where you're seeing the most stress, is it retail consumer? Is it something else? Is there a part of the business that you really worry about?
Certainly retail and consumer products are going to be affected because, of course, people's discretionary spend most manifests itself in those sectors. But what's happening in the energy sector, what's happening, of course, with the dual challenge of energy transition during a time in which we're trying to deal with the profound disruption to gas and oil supplies, is going to put real pressure on those sectors.
How many zombie companies are in the UK right now? How difficult is it to estimate that?
Well, of course, the argument's always been that these companies, these zombie companies, can carry on going because interest rates are so low. Well, we're now in a raising interest rate environment. So I think that we will see a whole bunch of companies have been hanging on by their fingernails, not being able to do so. How many, I don't know.
Should we look at also some of these stress pressures in the US? We seem to underestimate the severe impact that actually all this cheap monetary policy has done for them as well.
Well, I think it was, politically, of course, there had to be federal support programs coming through COVID, but now we are in inflationary times. The real economy does catch up. Interest rates are going to go up, so we are going to see the effect of that in all Western economies.
Sam, what are you here in Davos for? Do you like it? Do you think it's the beginning of the end for this World Economic Forum?
Well, it's a very different Davos, of course. There's obviously the Russian and also the Chinese contingents aren't here, but there are fewer people. It's certainly easier to get around, but there is something missing. I don't know whether this is going to be regenerated in January or whether time has moved on. We've yet to see, but I think there is an awful lot of good debate on important subjects still going on.
So you're here not to listen to the sessions, I imagine, but actually to speak to clients and get business.
Well, we certainly speak to quite a few clients, but I am here to listen to some of the sessions. I went to an excellent debate last night on the metaverse. I'm going to a session today on criminal justice reform. There's some really excellent debate going on, but of course the connections that are made and refreshed here are an important part of being here.
Is there a glimmer of hope anywhere? When you look at the world economy, when you look at world affairs, there's a crisis from crisis from crisis. Is there anything good that can come out of it?
Well, you know, I think that COVID-19 was a dress rehearsal for many disruptions that are yet to come. You know, we're obviously in the middle of the Ukraine crisis, but there are many disruptions happening in every geography and every industry. The medium to long-term view, I think, is still, one can be optimistic. In the short term, lots of challenges, but businesses have been very good at pivoting on the back of these challenges.
So what do we need to get right in the medium term to make sure that it's not a shipwreck longer term?
Well, I think looking at through the lens of business, what business leaders need to do is to make sure they stay agile with their strategies, to the extent possible have their cost structures in variable rates rather than fixed cost structures so they can pivot quickly, actually executing their strategy, even if it's not perfect, but doing it now is important, and just making sure that they develop their businesses on the back of changing circumstances.
Is it very difficult to execute plans where everyone's resigning in the Great Resignation?
Well, huge pressure in the labour markets, of course, but and of course shrinking labour markets in many of the Western economies. Attrition rates are up in all industries, so it is challenging. And for certain industries like restaurant and hospitality, it's critically challenging. But I think that in the medium term, I think there's a lot to hope for.
Okay, Simon, thank you so much. I mean, we talk about a lot to hope for, but it's difficult actually to see amidst all this, doom and gloom, where we see it next. Matt, I'm going to hand it back to you, New York.
Yeah, Francine, thanks very much. Bloomberg's Francine Lacqua there, sitting down with Simon Freakley of AlixPartners and pointing out that it is difficult to be optimistic. I want to get to what we're watching on that note, because Michael Burry has tweeted something cryptic, he did tweet this yesterday, but now I'm on Twitter and it's been deleted. Fortunately, people save thave these tweets, so here we have it.
You saved a copy.
Sorry?
You saved a copy.
No, well, Sarah Mazzulli saved a copy, our producer. Thank you, Sarah. And here it is. As I said about 2008, it's like watching a plane crash. It hurts, it is not fun, and I'm not smiling. Now, you have to suspect that he's talking about markets here. Of course, in 2008, he predicted the housing crash. Yesterday, we got housing news out of the U.S. that was far worse than expectations in terms of new home sales. We have had a red-hot housing market here, Anna, but obviously, as prices rise, there's no inventory, and now mortgage rates are going up. It seems that it could turn around.
Yeah, there's some sticker price shock happening in housing markets. Of course, Michael Burry of Big Short fame, as well as of Scion Asset Management. Let me tell you, I'm watching UK politics, Matt, which probably won't surprise you, because today we just heard already this morning, actually, that this civil servant called Sue Gray, you might not have heard of her outside of the UK. She was tasked with conducting a probe into these parties that took place during lockdown rules here at number 10 Downing Street and a few other places. She's concluded her investigation. The Prime Minister's already been fined by the Metropolitan Police for some of the parties, or for one in particular, that he attended. So we'll see what kind of language she uses here, and whether Conservative Party MPs
my eye roll goes all the way across the frame. Like, isn't there more important stuff to work on in the UK than
what could also
a cocktail party?
Well, that's exactly what the government will say, because in the aftermath of this, we might hear some news about help for those who are really being hit by the cost of living squeeze, by those who are going to be struggling to pay their energy bills. And that might be the way that the media timeline plays out, shall I put it like that. As soon as we hear the details of the Sue Gray report, which we should do today, look then for that to be followed by the government trying to reset the conversation with some help for those affected by the cost of living. That is it for the early edition. Surveillance in Davos is ahead. This is Bloomberg.